Joining us now are Dan Kaplinger, contributing writer to The Motley Fool, and Dan Geltrude, business analyst and founder of Geltrude and Company. Dan Squared, Dan and Dan, thank you so much for joining us here today.
Thank you.
Dan G, we will start with you. So this weekend, Hormel subsidiary Jennie-O recalled 90,000 pounds of raw ground turkey. How damaging could this be for Hormel?
Well, I don't think it's going to be as financially damaging as it could be. I think what they have to really be careful about is reputational damage, because they'll have insurance in place. They're going to do the right thing. Hopefully, they're going to follow the model from back in the 1980s with Tylenol, making sure you get out in front of these things, doing the right thing, management leading the way, taking responsibility. Safety of the public comes first. I think if they do those things, they'll come out okay.
Okay, Dan, joining us via Skype here. Jennie-O Turkey continuing, though, to suffer under lower whole bird sales, higher costs, as we mentioned in the intro, and then increased expenses when it comes to freight as well. What does this tell you going into the holiday season?
Well, I think that the entire industry has been sort of under pressure most of the year. Pricing in most of the meat categories has been really terrible compared to 2017 and past years. And it's really just a situation in which case companies have to figure out what the appropriate level of production is. So far, production levels have been incredibly high. Haven't been very many cutbacks in response to the lower prices. And you're just going to have to see Hormel and other companies do a couple of things. One, to focus on, to the extent that they are primary producers, concentrate on supplies, and then at the same time, try to concentrate on value-added processed products that they can charge higher prices on and boost their profit margins.
Dan G, speaking more on prices, of course, with the trade war, we have import taxes, tariffs as well, including on pork. How do you think that's going to impact these companies?
I think it will have an impact. I mean, tariffs across the board, not a positive thing. So anybody who's going to be subjected to tariffs are going to have some issues. However, let's hope we have the G20 coming up. President Xi and President Trump are going to be having some conversations about the trade war and these tariffs. Hopefully, they'll be able to come to some type of conclusion, because it's in everyone's best interest, not just ours, even more so for China to make a deal.
Dan, joining us via Skype, weigh into, changing consumer trends. It was interesting, just yesterday we covered this IPO that's expected to come on the market here that is basically lab-grown meat. It's not real meat. It's a vegan option for many of these. And so how does that whole consumer dynamic impact a company like Jennie-O and some of these other players in the space?
Well, it's the real key to the future for a lot of these companies, because what you've seen is that the pure play meat processing companies, they're really dealing with pork, beef, and chicken as a commodity. They've been under a lot of pressure, but you look at a stock like Hormel, Hormel's actually been doing better than most of the meat processing companies, because they've come up with these innovative new ways to try to position their meats in a way that appeals to those changing consumer tastes. And to the extent that they're successful doing that with those innovations that you were talking about and others, then they're able to boost their profits, because they can charge higher premium prices for those in-demand items compared to what you get just by selling a whole chicken at the market.
Dan G, what do you think? Do you think these traditional food companies are going to be transforming their offerings to keep up with consumer tastes?
Yeah, I think they're going to have to. I mean, in any industry that you're in, you're going to have to move with the times. You know, it's always business at the speed of thought. Got to react very quickly. I do like the idea, for example, that Tyson is looking very, very hard at expanding internationally. I think these U.S. meat processing companies really have to look outside the United States. There is a demand for protein, and if they really want to maximize their earnings and maximize their revenues, they're going to have to look outside the borders of the United States.
Okay, Dan C, via Skype here, weigh in on that. I mean, looking to other markets outside of the United States, financially, is that an easy equation that makes sense for some of these big companies like a Tyson?
I think Dan is right on there in the sense that it always makes sense to expand those markets. The problem that some of these companies are having with that, though, is just that you've got this elevated level of trade tensions in the global economy right now. And so the threats of increased tariffs and wider tariffs is posing sort of an uncertainty for these companies that are looking to do their international expansion. At the same time, we've also seen a big rise in the value of the U.S. dollar, that makes the profitability of moving overseas a little bit less attractive than it is when those foreign currencies are doing a little bit better. But even with those uncertainties, I think it's a strategic move that these meat companies need to make in order to get the most exposure and take advantage of the rising standards of living in many of these companies, especially in emerging markets around the world.
Danji, how do you think millennials view these brands like Tyson, like Hormel, amid all of these startups and more millennial-focused companies? What do you think their perspective is right now?
Well, you know what I'm seeing is that the market in general with the millennials, everybody seems to have a very short attention span. We're watching news come out, and in the moment, everybody's focused in on, let's say, tariffs, and then that has an impact on certain stocks, particularly what we're seeing here in the meat and poultry industry. And then the focus will change, and all of a sudden, this is not on the radar anymore. So I really think that there's an ebb and flow to the market. I think millennials fall into that, and we'll just have to see what happens.
I think that there's no denying, Dancy, that millennials love to eat. We see them posting about it on social media all the time, almost at the point to nausea at certain times. But in terms of these, commodity costs, which for many of these food retailers can really make or break a quarter, to what extent are they cyclical for a lot of these companies, whether or not they're selling beef as their main product or not? How much are these commodity costs impacting them in the current day?
Well, a lot of it depends on what the focus is. For the primary meat processors, it's a big deal. It eats into profit margins. But for those companies that are able to do these sort of processed foods where you add value, in many cases, it's the raw meat is the ingredient. It actually reduces the costs involved in processing that food to the extent that they can maintain their pricing on those value-added premium products. It can actually widen profit margins, and so that can be a benefit, especially to the extent that those meat companies are able to tap into new markets and the millennial generation and try to build up brand loyalty with young adults who will be with them for decades to come.
All right, Dan Kaplinger, contributing writer to The Motley Fool, and Dan Geltrude, business analyst and founder of Geltrude and Company. Thank you both for joining us.
Thank you.